All right. Thanks a lot for joining the session today. I just want to do a few check here again to make sure that the audio and video is good and you can see my screen. For those who can see my screen and the audio is good, the video is good, I'm looking good, you are looking good, please just at the question side type a 1. Okay, this is great. I can see a lot of ones here. All right, so let's get started. Well, today the topic will be cracking the code, how to day trade with less than 15 minutes a day. I'm just going to share with you my experience. So with this, I'm just going to take off the earpiece, so I can't hear you. I'm just going to speak. If you do like to communicate with me, please type at the question box. At any one point of time, if you do have questions and you don't understand, then you can pause. Rather, you can ask me to pause and ask me questions. Or once I've finish a section, then I will come and answer your question. All right, okay, that's good. Disclaimer from IG, please take like 10 seconds to read that. Basically, this is a educational session, no opinions or recommendations from myself and from IG. Okay, and then a disclaimer from my company, again the same thing, not financial advice. Okay, if you have not come across me in Singapore or Malaysia or other parts of the Asia region, then my name is Binni, right? I trade in a lot of instruments, for example, Forex, indexes, commodity, stocks, futures, almost anything that can be traded, then I trade that. Likewise, almost anything that can be eaten except a table or chair, then I eat that as well, okay? I'm still doing a lot of training with the exchange, all right? I'm an XGX Academy trainer, and as well as doing a lot of system development. That means I developed trading system for myself and also helped my clients. They are sometimes family offices, professional traders, etc., to develop and proof test their system. Okay, so these are the few things I like. If you ask me what are the things that I like in terms of my hobbies, the first one would be look at chart. The second thing would be look at is to trade, and the third thing would be to develop trading systems. So these are the three things that's top on my list. Okay, not about reading a book or watching a movie, etc. All along from a young age, these are my hobbies. Okay, all right. So content-wise, I'll be doing 3 parts. One would be the day trading strategy that I'm using. Of course, I'll talk a little bit about what is day trading and the daily day trading activities. So let me just understand a little bit from you guys, how many of you are already day trading? By definition of day trading, it doesn't mean that you open or close the very same day. I would mean that you are doing some form of a short-term trading. Short-term means that it can be a few hours or it can last for a few days, but definitely not to hold for years. Okay. If you are doing some short-term training, you can just let me know by typing a 2 at the chat box, at the question area. Okay. I can see a lot of people also doing some form of a short-term trading. Okay, that's good. All right. Well, just to let you know about my profile, because I think that is very important to know about a trader's profile to understand the methodology. Okay, because different people have different likings, different habits, or different requirements. So it might not mean that a scalping strategy, which is a very short-term type of a strategy, it's good for a certain profile. So for example, if you have a perfect scalping strategy, it might not be profitable for someone who have another different profile. Okay, so for me, I start my day really very early. Like today, I start my day at 5:40 Singapore time. That's in the in the morning, right? Because I have 2 kids and they need to go to school, so I need to be up so early to make sure that they are okay to go to school. Okay, then I start off with an hour of exercise, and by the time I get to my desk, it's about 8:30 to 9, and that's where I start my morning trading into the futures market. So I do Singapore futures market and Hong Kong futures market, as well as Hong Kong stocks and Singapore stocks. Right. So by the time it gets into 2 p.m., so that's where the London and the European markets open, and I will be doing the Forex, indexes, or commodity, whichever that's moving. I am a 4-hour trader. 4-hour trader means that every signal to me is a 4-hour. So if I means, let's say, the 2 p.m. signal, then my next signal would be 4 hours later, which is 6 p.m. And if I don't have any signal at 6 p.m., then the next signal will be 10 p.m. That's why you see that I have time like 2 p.m., 6 p.m., 10 p.m. And after that, I will go to sleep, right? Because I'm a 4-hour trader. That means I'm not one who doesn't fit what I want, because as a trader, I want to have some form of a freedom to do what I want, and that's the lifestyle I'm pursuing. So if I'm constantly staring at a screen, and that doesn't fit me. Okay, so very much a lot of my trading is partially automated. So I'm just going to share with you, if you're doing day trading, how you can, all right, turn your day trading into something with automations. Right, and that would relieve a lot of your, routine, mundane type of activities that you might need to do right now. Okay. All right, so let's define a little bit about what is day trading. By right, day trading means that you open a trade and you hope to exit the trade, at the very same day. Okay, but this is not my definition of day trading. My definition of day trading is that it is short-term trading. That means you're probably looking at a few hours, and if you're lucky, if price can move fast, then you might be able to exit your trade within the day. Okay, so that's basically what I think as a day trading. And if you're unlucky, then you might, I will be able and willing to hold the position overnight and until it hit my target price. So it might sometimes takes a few days, but my position's unlikely to hold for weeks or months. Okay, so usually if I'm lucky, within 24 hours. If not, then maybe I have to hold it for like 3-4 days maximum, and that to me would be more towards a short-term swing trading. Okay, so if you are talking about Forex, each time I'm after about 100-200 pips if the market move fast enough. If not, then if I decided to close the position, then I'm looking at about maybe a move of 50 to 80 pips depending on currency pair. Okay, usually for day trading, it will happen at the lower time frame. That means you are probably looking at the lower time frame, but I said that my trading time frame is mostly in the 4-hourly chart. So I don't really move very much to like 5 minutes or 15 minutes. I would stay usually in the time frame of 1 hour, 1 hour chart or 4-hour chart. And I do refer to the higher time frame, which is the day and the week, even if I'm doing more of the short-term swing. I'll explain later why, right? Now, if you look at the definition of day trading, what this means is that it's usually time-consuming, energy-consuming, because these are what people might perceive as. Okay, why is that so? Unlike if you're investing into stocks, then a stocks means that you could just put it there and hold it for a period of time, like months or in fact years. You don't really need to actively manage that. But for day trading, it's perceived as time consuming because often you might need to stare at it, and also people might think that you need a lot of quick responses. Like for example, you need to be able to click the button fast and exit or enter a position fast, right? So because of this, it doesn't attract a lot of people to do day trade because they're often quite scared, right? To be held up at the desk or to do some quick, fast thinking or action. I thought that this is a wrong perception for day trading. In fact, that I love day trading very much because it is part of my portfolio. Why do I say that? Because I have portfolio on stocks. I have on REITs that gives me that recurring passive income. I do have also bonds as well, and I do have unit trust that pays regularly. So all these becomes a basket of my slightly longer term portfolio. But I see day trading as also part of my portfolio, not my activities, because there are times that we are not able to enter a trade. Because why? Either that you have some long-term commitment that you don't want to hold for long, you just want to go in and out, but yet you see some very good opportunities, or the market is just not suitable for medium to long-term positioning. Like for example, we saw that the US indexes, US market, they are near to the high. You just don't want to get in for long-term because you're just afraid that you'll be stuck at the high price. So in this case here, trading, any form of short-term trading, right, it is very useful to back up for things that you can't do. Okay, and the other part, right, of what I think is for day trading, if you do have a basket of stocks that you're holding on for longer term, you know, it's quite painful to see the correction, especially when overall the market can just correct for like temporary for 10-20%, and you see your stocks also moving down in sympathy. Then what can you do during this period of time when the stocks are moving down? Then you can use day trade as like backup income or backup activities to get extra money, hopefully, while your stocks are falling in value. So it does give a lot more flexibility. Okay, now I'm going to introduce the method that I'm using, and because of the short time, I can't be talking, you know, extensively on this. All right, but if you do have questions, you can just ask me here, okay, later on. Right, so the method that I'm using is called wash and rinse. All right, let me just ask you a question. Have you ever encountered this before? For example, let's say you bought in a position, okay, that means you long a position, and instead of price moving higher, which is what you expect to do when you long a position, you long a trade, right? So instead of price moving higher, you will keep falling, and it keep falling until the point that you decided that you have to cut loss. That means you have to get rid of your long trade. That means you bought something and you have to sell it. Okay, but the moment that you sold it, the moment that you cut your loss, it will just turn up like nothing ever happened, and it just move up, and move to an entry price, and move to a profit, and move to so much profit until you are totally bitten. Okay, have you ever experienced this before? If you had, please type a 3 at the question box. Okay, maybe you type a 3 with how many times that this happened. I mean, even myself, I also count how many. I also cannot remember how many times this happened. Okay, so I will probably type like infinity sign or whatever. Okay. Okay, so this is not uncommon. In fact, this is very common, and this is also something that I am still experiencing. All right, but lesser. Okay, so my presentation focused on how you can manage that. Okay, now the standpoint is this: there is no way sometimes to avoid it from happening. That means that to avoid, right, you getting washed and rinsed out of the market. Okay, so there is no way, right? But if you know of how to counter it, that means if you know of how to counter these wash and rinse activities, then you can turn your loss at least into some profit, okay? Or you can do something about it. So this is the whole idea here, okay? So let me just ask you one question. Now this question would be, let me just get my pen. Okay, now the question is that at this point here that I'm showing you, okay, so this point here, we know that this is like a U-shaped turning point, usually denoted to be a support level. Okay, now at this point here, we saw that price again, you know, is a U-shaped pattern and then seems like a support. So let me ask you this, right? When price is coming into this zone here, generally, are you more inclined? Okay, and there's only 2 options for you, right? Are you more inclined to go long, which is to buy and to assume that it is supported, or are you more inclined to sell? That means that to assume that it is not supported. Okay, let me know your answer at the question box. Are you more likely to buy, or are you more likely to sell at the green arrow? Okay, I see that there are some the response, mixed response of buy and sell, right? Okay, one of the things that's being said is you are looking at the trend because the trend is down. Okay, I understand that the trend is down, but you know, for if you look at the concept of support resistance, then because it came down to a support, it might have just moved down, all right, to a strong level here, despite that it's coming down, because overall the movement, right, is actually up. It could be that this downward movement is just a correction, and price could be coming inside here as like a support level. All right, so there are mixed responses here, but this is not the key that I want to show you. The key that I want to show you is that when we are working with programming, all right, all these levels, okay, all these levels, all these turning points can be pre-calculated, can be seen by programs. Okay, can be pre-calculated, can be seen by programs. That means that if you see it, then the programs can know it as well. Especially we are talking about the AI now, right? It's really advanced, right? So when this happen, okay, a lot of time you cannot assume and you cannot expect, all right, the norm to be happening. Okay, meaning that, well, you have to treat the market at like a whole new level already. Okay, that means that whatever that happened in the past, like 20 to 30 years, whatever that's being written in some of the very old style technical analysis book, I won't say that they are not correct, but then some of the concept might not be relevant. So we have to look at it from a whole new area. Okay, so let me just clean this off and then show you what happened after this. Okay, what happened was, oh yeah, I need to move my pen, and that's it. Okay, so what happened was that price, instead of stopping at that known support level, that means at this known support level, right, it crashed through, okay, and then it moved down to the next level of support level, which is given by this, all right, and then after this, it just shot up. Okay, then that means it hit that support level that was given by here, and then price shot up and never looked back. All right. So this feed, what I was trying to say just now, what I said, right, was that some people might assume that this area was a support level. They might move in to buy. Okay, they might just say that, okay, since it's a support, I'm going to assume that it's a support. But the other thing that you have to consider would be, a lot of time, that there are a lot of different levels, and these levels sometimes, right, you thought that they might not be, you thought that they might not reach, that means the price might not reach there, but many times it will just overshoot, okay, and to move to that level. But most important, if you had assumed that this level here or this price level here, right, is going to be like a support, and you're going to say, hey, look, let me just put my stop loss just slightly below to just buy that correction, or buy that to take a risk, right, on this position, you find that a lot of time when the market moves, it just moves down in a very furious manner, all right, to stop you out totally. You can't even talk about just a few pips below a level, and after that, right, when you decide to give up that trade, it just moves very much against you. Okay, so what I call this setup, or rather a phenomena, all right, I call this a wash and rinse. Okay, so this whole section here, this area here, all right, it's like a wash. So price was being washed down, and then after that, when it moved up to a certain level, we call this a rinse. Okay, so let me just continue to explain how to use this pattern. Okay, so to define what is wash and rinse, a wash means that it's a move in the opposite direction of what you intended. So for example, if your intention is to buy and your action was you already bought, then a wash means that you move against in the opposite direction. So if you bought in, the opposite direction would be it dropped. Okay, now the rinse means that, you know, after certain action that you did, could be that you cut your loss on, etc. All right, then the rinse happen in the original direction. That means you bought in already, and then maybe that you got yourself stop out. Then the rinse, when it happened, it will be in your original up direction. okay, the results would be unnecessary losses. Okay, now, so a typical wash and rinse for the buy side goes like this. Okay, imagine that if you want to buy, okay, you always want to buy low. So we are looking for a price correction, all right, to result in the wash bar. Okay, what do I mean by this? Okay, so when you have a price correction, that means that price have to move down. Only when it moves down, then price will move lower, because the whole idea is that if you want to buy, you always want to buy low. Okay, so in order to buy at a good price, price will have to come down. So this is where the wash bar happens, right? So the wash bar would be defined as any bar that had a close, okay, below the previous low. So if I mark the wash bar as 1 and then the previous bar as 0, then the closing price of 1 must be lower than the lowest price of 0, sorry. That means that 1 must close lower than the low of 0. Then we know that price actually moved lower. Okay, so in this case here, if you look at the wash bar, then the wash bar had a close lower than the low of 1. Okay, so this will be the first criteria of the wash and rinse pattern. Okay, now let me just give you in terms of numbers. Let's say, for example, if the bar 0 had a low price of $5, okay, at the low price of $5, right? Can I ask at what price it will result in a bearish close below 5? Is it $4 or is it $6? Let me know the answer in the question box. Let me just repeat the question. At what price will result in price closing lower below the low of the previous bar? Is it $4 or is it $6 for the wash bar? That means if the closing price is $4 or is the closing price $6, that will result in a bearish close. Okay, so the answer would be $4, all right? Because then only when it closed below 5, then you will know that price had a bearish close. Okay, so let's say, assuming that price closed at $4, right? So what happened to $4? $4 would mean that those who bought at around here at 5, they would see their position at a loss. Okay, so what would people do if they see that temporarily their position is at the loss? They might choose to go and sell out their position, to take a loss, okay, to cut a loss. Okay, so that's the first reaction here. Now, some people might say, okay, initially it was supported at 5, but now since it gone to $4 already, so they might want to open a short position. That means that they say, okay, so this is no longer bullish anymore. I want to cut my, not only I want to cut my position, right? I want to actually turn short. So some people might just sell at $4 and open a new short position. Okay, so as long as price continue to drop, okay, maybe to 3 or maybe to 2, those who shorted would still be happy. Okay, those who cut their losses when they see that it is at $3 or $2, right? Although they're not too happy, but then they are still glad, lucky that they managed to cut loss at $4. All right, so what is the key thing of the wash and rinse pattern? The key thing is that if we can draw a line at the low of the bar 0, okay, why draw a line at bar 0? Because 1 had a close below the low of 0. So this is line, right? It's almost like the determining line. Okay, so I call this a wash line. So as long as price can stay below the wash line, which is below 5, then everybody will be happy. Now let me just ask you one question. What if price doesn't stay below 5, but instead it moves up and starts to trade at $6 and ultimately $7? What would happen to those people who cut loss earlier? Will they be happy or sad when they see that price is right now at 7? What will happen to those people who cut loss earlier? Will they be happy or sad? Yeah, sad, right? Because then they bought at 5, they hope that price can go up, but then price, instead of going up, it went down first. Okay, they cut loss and right now they see that it's actually at 7. Okay, they are sad. Now let me just ask you the next question. Those people who shorted at $4, when they see price moved up to $6 and to $7, okay, would they be happy or sad? Why? Because they shorted at $4 and they hope that price can go to 3.2, right? But it doesn't move. Instead, it moves to 6 and 7, right? Their short position is right now at a loss. Okay, so they are sad as well, right? So in this case, when the rinse bar happens, it means that those people who gone short, those people who took the loss earlier, right, would be in a desperation, would be in a regret mode. Okay, so what they can do, right, is that they can choose to, number one, get in the long position again. Those who cut loss, they want to buy to get in the long position again. And those who shorted, what they have to do, they have to cover their short, which is to buy as well. And of course, those people who traded on the wash and rinse will be also buying, because right now it becomes a genuine pattern for them to buy. Okay, you look at the actions of the three groups of people. Okay, the actions would be buy, cover, which is also to buy, and to buy because they want to establish a position. So when the wash and rinse happen, three groups of people with different objective, they will do the same thing, which is to buy. Okay, now when this happen, when a wash and rinse happen, it is usually, all right, explosive. Okay, because you have three different group of people doing the same thing. Okay, that's why you find that when you had a loss, you make a loss already. All right, and when you flip the other side, then price will just go up, 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 and you can just only look up, look only at your position, but you don't have it anymore. Okay, so this is the reason behind why this is so. And then who caused that wash and rinse to happen? As I mentioned already, all these levels can be seen. Anything which are too obvious, too good to be true, okay, they have to test your patience. All right, so if, for example, you can see these levels, then I'm very sure that machines or some other people can see that levels, and they can just force price to move against the current flow for a while or it causes some people to be in agony. Okay, all right, so this is the whole idea of wash and rinse. So let me just repeat how it works, which is how I talk about the psychology of wash and rinse, right? So wash and rinse, what you have to do if you're having a buy, you need to have one bar that close below the previous bar low. It must be closed below the previous bar low, and the rinse will happen when it closes back up. Okay, so what you are seeing here is the most simplified version of wash and rinse. Okay, meaning that wash and rinse is itself very flexible. Okay, it's just not a two candle or two bar pattern. It can be a multiple bar, all right, like even 10 bars in between. I remember that time when I traded in dollar yen, when it shot up huge, then we had almost like a 10 plus bar in between the wash and the rinse bar, and dollar yen just shot up non-stop, right, during that trade. Okay, so the most simplified wash and rinse pattern is just a two bar pattern, one washed, one rinse. Okay, that if you talk about maybe like a little bit more complex pattern, then you can have multiple bars in between. I mean, it's unlimited. Okay, the whole idea is that the rinse will only happen if price can close above the washed line. Okay, so this is how it goes, right? Okay, now, so for the sell pattern, just remember, when you want to sell high. Okay, and when it means by sell high, means that if you have bar 0 and 1, then the 1 had to close higher than the previous bar high. Okay, when it closed higher than the previous bar high, you just draw a horizontal line. We call this a wash line. If price stays above the wash line, nothing will happen, but a trade signal, which is a sell signal, can happen when price close below the wash line, and this will result in the rinse bar. Okay, as I mentioned, the simplest pattern would be just a two bar pattern, all right, washed and the rinse, but it can be unlimited bars in between the wash and the rinse bar. Okay, all right, I'm just going to pause here to see whether you do have any questions for the wash and rinse, and then I will continue to move from there. you have questions, you can just ask me at the question box, then I can answer you. All good? Does it work on all time frame? Yes, it does. But as usual, the higher the time frame, the less noise there will be, and the more moved. Okay, that means the more amount of movement you will be, right? Because why? It has to do with time. Okay, so let me just explain this. All right. So let's say, for example, this is a wash line. Okay, so this is the wash line here, and then this is a day chart. Okay, so you have the wash bar here. So this is a down bar. So this is wash, and then you have various bars that goes below it. And remember, each bar is a day. Okay, and then you have a rinse that close up that trades above the wash line. So below the wash line would be one bar here. So that's 1, 2, 3, 4, 5, right? So when you have a day chart, so this is 5 days, isn't it? Okay, so the amount of money that's into this pattern, which is 5 days, huh? Okay, 5 days money, right? Would be much more if you're talking about a 1 hour chart. So if this is a 1 hour chart, then there's only 5 hours here. So let me just ask you one question. Will there be more money that's involved in 5 days versus 5 hours? Which one has more money? 5 days of 5 days or 5 hours? Okay, so if your answer is 5 days, then that's very logical, right? We all know the longer the time frame, the more money that's involved. Okay, so when this happens, it means that more people get money stuck there, right? Okay, so when you have a higher time frame, then you will be more effective. Okay, so for my usage is we use on the multiple time frame. Okay, multiple time frame. So this will answer the second question: what time frame? Multiple time frame is not only one time frame; it's multiple time frame. And then what time frame is your bar? Okay, let me just explain that later. And it'll be good to take the second part of this session, which happens on the 18th of Jan, because 18th of Jan, I will talk about how we can apply the wash and rinse in different setting. And then, basically we'll touch on the time frame use as well. Okay. Where will be the SL? Well, the SL is at the wash bar or the rinse bar, whichever is lowest. In this case here, the reverse is the same. All right, for the sell pattern. Okay. Okay. All right. So let me just continue to move on. Any particular bar type to confirm the rinse bar, or as long as it closed above the wash bar and the rinse bar? Well, yes, any as long as it close can already. But as I said, right, our trading is on multiple time frame. That means that just now when I said already, I am basically a 4-hour trader. So I will fine tune the trade to trade in the 4-hour, but the pattern will comes from the day and the week. Okay, but we will fine tune our trade to trade in the 4 hours. So let me just share with you what is usually the activity, and these will answer your question already. Okay, how many of you are using some form of automations? Like for example, when I define automations, basically automations would be things such as you don't need to draw anything on your chart. Okay, you automatically draw for you. So that's one part of automations, right? To replace your manual work. Okay, the other type of automation is what you see here is that I built myself and for my community what I call a dashboard. Okay, like a screener that's monitor and screen for trades. So every time when a trade happens at that point of time, okay, then you will alert us. So it's like you have like a collection of all the different pairs and instruments that you are trading, and you don't have time to flip through every one chart. Okay, remember we want to achieve day trading in 15 minutes, huh? Okay, so you don't want to flip through every one chart. So you want your trade, that means the signal, to come looking for you, but you don't want to rely on tips, because I mean, you want to basically have a tool, you want to have a skill, right? You don't want to have tips. People tell you what to do. Okay, so what I did, right, is I built myself this particular like a dashboard, all right, that gives me real-time alerts. Okay, so how to use it? Okay, these dashboard works like this. You can consider building yourself one if you are interested, right? So every time when there's a signal, right, then it will just highlight in yellow. So I just have to zoom in automatically, all right, those pairs that has a yellow. Okay, so as I said, my main time frame of execution is 4 hours. So every 4 hours, the signal will pop, 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 pop. Okay, now when you see 1 and 19, what this means is that 1 hour and 19 minutes ago, okay, 19 minutes ago, right, that there was a signal. Okay, all right. So I know immediately that I don't need to look at all the pairs. Like for example, I can be looking at like euro yen. Okay, euro yen is a sell signal, and that signal happens at 5:15 hour ago. Okay, so it's especially important for people who are working, because when you're working, you are having a meeting, right, and then you are also wanting to trade. And it's not only about people who are working. Sometimes even if you're a full-time trader, you just walk away, you just want to have a date with a girlfriend or boyfriend, or you just want to watch a movie, right? You just want to have your life, or you just want to relax, and you just want to do some gardening. And you walk away, and then that signal happened, or you just don't know that it's happened, right? Okay, so if you can have something where at one glance you say, okay, now I sit down here, I'm just going to maximize my time, I'm just going to look at that particular pair, because then that's where it's highlighted. Okay, so you don't need to look at everything, you just look at that euro yen, or maybe like here we go, another 5 hours and 19 minutes ago, you have the cat yen, and then you have the Aussie Sing, and then you have what you do, pound yen, and then you have okay, that's it. And then you have the pound yen and the euro yen and cat yen as well. Yeah, that's it. Okay, so this becomes very, very quick for you to find potential trades. Okay, and what I did is that the H4 is the main execution, but I also built myself like a warning signal, okay, which comes in a H1. So for example, for the cat yen, the 4 hour signal happened 5 hours ago, but the 1 hour signal happened 7 hours ago. Okay, all right, so that's how it works. All right, so I do have other signals that happen around here, which is like 14 hours ago. Probably you don't want to look at these anymore because it might be outdated. The trade had already moved. So automatically the eyes will just zoom into those yellow colored thing. All right, and then you already be able to zoom down onto a few of the trades that you're interested in. Okay, so that's the first part of my day trading. That means that when I day trade, if you look at the number of instruments that I'm trading, right, probably you say, are you really like trading? You trade and then you train and then you talk. Do you even have time? But you know, that's not the key thing. If you are long enough already, you know how to manage that, then you know how to make sure that you maximize your time. And this is one tip that I'm doing so. Okay, all right. Now, okay, wait, I need to switch my pointer. Okay, the thing is also about having a dashboard is that a lot of time, right, when you do a trade, you do a particular trade, it's like, hey, how come that this trade just doesn't move well? Okay, but when you do another day, another trade, right, and how come it move well, and you realize that it's not only that, for example, a pound yen move, right? When a pound yen moved, then the euro yen also moved, and the cat yen also moved, and Aussie yen also moved, right? You realize there's certain form of a pattern. Okay, pattern like consistency. Okay, now what this means is that when I build a dashboard, I'm able to look at the pattern. I'm able to track consistency. That means I'm able to say that it is not only a movement of just one, okay, but similar pairs having the same signal. And this will increase very much the reliability of that particular signal. So when I have a dashboard, you realize that at 5 hours and 19 minutes ago, okay, 5 hours and 19 and 7 and 7, 5, 19 and 7, 19, it means that 5 hours and 19 minutes ago, all right, these signal happened. And 7 and 19 minutes means that 7 hours and 19 minutes ago, the signal happened, okay? So if you want to ask me, like, let's say, if I see 001, okay, what does it mean? It means that 1 minute ago, all right, the signal happened. If I see 0 dash 01. Okay, so I just want to know how recent the signal are. Okay, now but back to this here, right? If you look at 5 hours and 19 minutes ago, you realize that there was a CAD yen sell signal 5 hours and 19 minutes ago. This one was a euro yen sell signal, and here was a pound yen sell signal. Okay, what this means is that with the dashboard, you are able to see consistency. Okay, now it's very important because it greatly increases your profitability, and it's also help you to scan out and filter out those not so good trade. All right, okay, so if you ask me on automations, right? I mean, what are the things that I automate? And these are the things I do, okay? To have like a dashboard to tell me signals, as well as to show me consistency, okay? So let me just show you the outcome of that day. So same thing, what I did was none of my chart, right? They are drawn by me. They're all drawn by automations, okay? It saved a lot of work, but at the same time, it reduced a lot of inaccuracy and errors. Okay, I'm sure that you don't want to go back home, right? And you're so tired already, you still need to draw all this. So for me, I like it to be color coded. I like precision. All right, I don't like dubious stuff. So if I can just let the automations draw my chart, I just have to do one thing, okay, which is to decide whether I want to trade or not to trade. So it's a 0 or 1 thing for me. It's easier. Okay, so for pound yen, the signal happens here, right? Let me just get the pen. Okay, the signal happened here. So when it happened, you know, it will alert me via the dashboard. So I was able to put in the trade. Okay, so for Aussie yen, the signal happened here, which was slightly earlier because you can see from the dashboard. And for euro yen, it happened here, okay, at the same time as pound yen, right? So you can see that because of signals happens to similar pairs, so the outcome was it actually moved very well. Okay, so for euro yen, it moved like about 75 pips in less than 6 hours, and pound yen, it moved like 96 pips, right? Okay, and all using only one setup, which is washed. Okay, so where is the wash, right? So this is like 4-hour chart here. So when price moves up like this, so this is like the washed, and then this one is your wash line. So this is like your wash line here. So when price moves up, as long as it cannot hold above the wash line and it come back down, and that becomes a short signal for us. Okay, I'm not only talking about a signal. Okay, I mean, a lot of time when I see students, right, and traders, what they will do is that they will learn different methodology, okay, but they don't answer the crux of being profitable. What is the crux of being profitable? That is, you make sure you know all the information. What's your information to a trader? You know exactly which is moving, which is the pairs you need to zoom in. Okay, so you basically are after low hanging fruits. Okay, all right, so that's number 1. Number 2, what you are really looking at is that you want to be notified the moment that it happens. Okay, because think of your behavior. A lot of time you miss a trade, and then by the time you realize it and you get back home and you put in a trade, you are usually late and you usually miss the huge moves. Okay, so when you really put in a trade, then you are really risking a lot for just a little bit. All right, so the key thing of trading is not really all about the methodology. It's about finding ways to make you profitable. Okay, so this is something that I really want to share with you. That means that you want to have some form of automations here to alert you, to let you know that, hey, the trade is coming, and you're able to catch it at that point of time. Okay, so even if you can't catch it, doesn't really matter. At least you are made aware. And if you need to have a re-entry, then you know that these are the trades that you want to zoom in. Okay, all right. Okay, any question here so far? Okay, no question, right? That's good. Okay, now again, right, as I said, automations is good because it's free up a lot of time. Okay, but not all the trades would be accurate. Okay, so when I am training as well as trading, okay, I focus very much on the quality of trade. All right, that means that, okay, yes, I know that these are trades that's coming. These I will be alerted real time, but there are also certain things that I do check, because in terms of the automations I built, right, basically everything are all covered, right? They will just put in the trade for me. They will put in the stop loss. They will put in the target profit. Later, I'm show it to you, and they will do the trolling. They will keep on adding in the winning position. But very important, what a lot of traders miss out, all right, is that they don't go and check the higher time frame. So if there is one key takeout that you want to get from this session, apart from having the need to automate, which we know about already, all right, is that you need to check the higher time frame. Whether you are trading in a 1 minute chart, or whether you're doing a 5 minute scalping, or whether you're doing a 1 hour, it is so important to check the higher time frame. So I always switch to the day chart or the week chart to check the higher time frame. Okay. Well, one of the question was that how is this chart being made? They're all made automatically with the set of indicators and EAs that I've designed. Okay, so this is my method and I've designed that. Okay, all right. So when I say check the higher time frame, just take one example from pound yen. Okay, pound yen. We saw a very obvious wash and means, and is the pattern that I shared with you just now, right? So price had a washed up. So why do I say it's a wash up, right? Because at this bar here, price had a close above the previous high. So that's a wash bar, all right? And then generally the trend was heading down and it hit into a resistance level here. So we know that that's a downtrend and that's a resistance level, okay? And then what happened was that price cannot stay above that wash line. In fact, it came back down, boom, like that. Oh yeah, that becomes our trading opportunity. Okay. Now you see, every day that's opportunity that you can get. But I mean, if a trader is to focus too much on the methodology without controlling the process, okay, without managing the process, you might not be profitable. Okay. So what I'm trying to do is that, yes, I think that the methodology is important, okay, but the process is very different for different people. Okay, I just give you an analogy in terms of medicine. So we can have this treatment. This treatment works very well, but why is it that this treatment, when you give it to patient A, it doesn't always happen true to patient B or C? Okay, even if we have only one standard treatment, okay, the process of implementing that is very important. So same thing, right? When you have a method and that method is fantastic, right? But it doesn't mean that when you give it to trader A, all right, and then to trader B, B will get the same results as A, okay, because of how you manage that process, all right? Even if you read the same book, even if you read the same textbook, right, that doesn't mean that every children will have the same grades, isn't it? Because it's the process. So what I focus on after realizing for so many years is that it is the process that's very important. Okay, so today I'm highlighting the process here. All right, there's some questions. Let me just answer them. Can it be linked to the platform and trade automatically? When you say that, can it be linked to the platform and trade automatically, I assume that you're talking about a Meta for trading platform, right? Yes, it can be. What I meant is how you set up the alert. Okay, I can cover that in MT4 later. How to automate that alert? Okay, now when you have all these alerts, we just clean this. Okay, when I have all these alerts that's being built, right, like this, in it, it's already automated. That means that whenever the alerts happen, it will just automatically boom and send it to me. Okay, now later I'll be going through the MT4 tools to talk about what kind of things you want to set it up so that you can receive a particular alert. Okay, what you can do. Okay, all right. So these are custom coded extra add-on, all right, that can be inserted into any MT4 or MT5 platform. Okay, so once I put it in, I can get all these alerts already. Yeah, it's automatically coded. It's coded to be sent automatically. Let's put it this way. Okay, just to quickly talk about this section here. Before that, any other question? I will come to the section on MT4 on how to set an alert if you are interested to get some form of a price alert in your MT4 platform. Okay, and any question to the front part that I've covered on how I'm trading? Okay, don't have? Okay, very good, right? Okay, good. Okay, so if there are no other questions, then let me just cover this part here, which I see it as also very important in terms of day trade. So what I covered was day trade, what kind of method, it can be any method that you are using, right? But a lot of people doesn't focus on the process. That means that you can keep on learning new methods. But if you don't manage your process properly, what is the process? How do you receive the trade alerts? How do you go and how do you know what trade to trade? That's very important. Okay. How do you ensure that you don't miss out those good trades? How do you ensure that you don't miss out those good entries or those good exit? Okay. So these are all the key questions. Okay. And things like how do you adjust your risk management or do your trade management, etc., will be also very integral, very important to profitability. Okay, so we are not talking about methodology only. Okay, because there are so many methods and we have so few profitable traders. Why? Okay, because people don't focus on the most important thing. Okay, which to me, the most important thing, when you read a lot of books and you talk to profitable traders, they will tell you, hey, come on, risk management, trade management, it's the most important steps. Okay, but they forgot to say, hey, look, the process, how do you do your risk management? The first thing they always would say is, okay, you make sure that you allocate your risk properly. All right. Now, but many times when you are so tired already, okay, I'm not talking about physically tired, but you are so drained, okay, so tired and so drained from losses. Yeah, I'll be very, very factual here. Not many people, or we also see quite a lot of people who make losses consistently. So when you're so tired about losing already, sometimes you really want to say, hey, look, let me just put in this one, okay? And when I put in this one, all right, perhaps I'll make it big. Okay, you get what I'm trying to say? Okay, so when you look at and focus on the process, okay, what is the process that I'm talking about? If you want to day trade, don't forget, the definition of day trade means that you in out very fast. I changed that definition to say it can be a few days if we are not lucky. Okay, but the fact is that it's a short-term type of a trading where many times when you're so tired and so drained from the activities of trading, that sometimes you don't really have enough energy to go and calculate your risk properly. Okay, all right, so this is something that in my years of training, all right, a lot of people don't talk about it, but it happens to students and to traders. You just don't have the energy to go and calculate your risk properly, and if you don't have, then how to go and do your proper risk management? All right, Okay, so I see this as a huge hurdle in day trading, and this is one of the biggest, or rather not the largest, but biggest problem of people not being profitable. And all this can be managed with automations. I will cover that on the 18th of Jan. Okay, so make sure that you attend the 18th of Jan session. There are ways to overcome it. All right. Okay, now next, stop loss. Okay, now this stop loss in day trading is even tougher. When you have stocks, okay, face it, many people don't have stop loss. Okay, that's why a lot of stocks will end up in a huge loss, and then they are being locked in the fridge and left for your grandchildren. Am I right to say that? I'm not joking, because I've been training for so many years and I talk to so many people. All right, they find that you know, Binni, what you say is correct. You are one of those rare people who dare to tackle this issue, and who dares to speak the truth. Okay, and so that's why I want to say that stop loss, sometimes, right, you put it in, but many times you take it out. What is the meaning of you take it out? So for example, right, you have a position and it moved against you. Let's say this is the buy position, right? You bought and it goes down, 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 right? You saw that there's a support level there. You knew that there's a support level there, right? And that support level is your slightly below the support level is your stop loss. And you say, okay, I will stop out. Okay, but when it just get near the support level, then what would people usually do, or some people would do, right? Is that they would take out their stop loss. Okay, they take out their stop loss because they've seen so many times that in the past, when price touch that level and you are being stopped out, and after you are being stopped out, you just reversed immediately. Okay, you've seen that so many times. Okay, so what happened is that when you have a stop loss, you put it in, but when it's near, you take it out. And when you took it out, right, and that particular trade happens to be the one that resulted in a huge loss. Okay, you just don't know why that somebody is against you, but it just managed to result in a huge loss. Okay, so again, risk management very important, putting in a stop loss very important, but there are ways to overcome it. Okay, meaning that I'm not saying that you don't put your stop loss. I'm just saying that if you can trade, for example, if you can consider wash and rinse as your method, that we are basically trading after a trade has been stopped out. If you look at the idea behind, because that wash bar is to trip a stop. It's purposely to go and trigger a stop loss. So we wait for a trade to be stopped out. For most people, when it reverses, all right, in opposite direction, that's when we enter a trade. Okay, so risk management, yes, you must put in stop loss, but the fact is that a lot of people remove stop loss. Okay, then how to manage that? You consider that a lot of plays can have a wash and rinse. Okay, that means that you have to change your mindset to say that, okay, this level is such an obvious level, it's going to result in a wash and rinse. Okay, fine, I'm just going to wait for the wash to come and the rinse to happen. Okay, and then I trade after the wash and rinse, and that would prevent a lot of stop loss. Okay, now lastly, equate your risk amount. Okay, this is also something that I want to share very, very strongly. A lot of people either overuse the amount of money they have inside their trade, or a lot of people undertraded. Okay, undertraded means that they see a good trade, but each time they just put a little bit only. I'm not saying that you should put a lot. I'm saying that you should understand your risk profile and put in appropriate percent. Okay, but a lot of time what I'm seeing is that people, because of the previous losses, okay, that means that they lose already and they're scared, right? So they put in a very low amount of risk for the next trade. I give you an example here. First trade was a win, fine, right? Okay, second trade, you decided to continue. Okay, it was a loss. Third trade was a loss. Fourth trade was a loss. Okay, and then fifth trade was a loss. So you got 4 losses already, right? Okay, then what happened to the sixth trade? What would you likely to do? Would you continue trading or would you stop trading? Let me know your question, your answer. While I answer the question, is there a recording for 18 Jan? Yes, I think there would be. How do we access your automation too? If you want, you can contact me via the email. Then you know, you can go to my website. Also can. Later I will flash my contact. Okay. So what happened after you have 4 consecutive losing trades? Do you continue to trade or do you stop? Be truthful. Okay, some continue, some stop. Okay, so it depends really very much on profile, right? But what I'm seeing, all right, with a lot of traders that I'm training, guiding, because I also train for the institution, right, is that they tend to stop. Okay, if they don't stop, they tend to downsize and trade very small. Okay, I understand that this is true because you need to take a pause, you need to you know, like refresh yourself, right? But if you look at accuracy, you are supposed to measure that out of 10 times. Okay, if you look at accuracy 10 times, right? So well, if you have the next 5 remaining trades as all profitable, then out of 10 times your accuracy is 6 right, 4 wrongs, you know. Okay, so when this happens, your system basically has a 60% accuracy, which to me is high already. All right, because if your reward to risk ratio is on the high side, okay, I mean 1.5 is to 1, 1.5 reward a risk of 1, with a 60% accuracy, you can make money over long run. But to me, that's theoretical because a lot of people will choose to stop. Okay, now, so in terms of risk management, when you look at a system, all right, you don't have that profitability because there's a lot of human involved in it. Okay, so this is the reason why I love automations, because machines doesn't have emotions, right? So basically it's just a 1 or 0. If it meets the rule, it go. If it doesn't meet the rule, it just no go, right? Okay. So what I want to say in terms of equate your risk is that if you want to be profitable in day trading, then a lot of things you need to outsource to the machines. Okay, let the machines handle your emotion. You just have to do one thing. Okay, you just have to decide whether this is a go or no go. All right, by equating your risk amount to something that you can lose. Okay, so it can be you start small, like each time you just do on the 0.01, all right, which is the 1 micro lots, and you keep it going, all right, but you equate that loss amount. Let's say every time you lose $10, you say, okay, $10 is equal to just a tub of ice cream. So if I don't eat that ice cream, and of course I cut away sugar and fats, all right, and I take these to gain experience, so I'm gonna do these like 100 times to make sure I get that consistency. Okay, so if you can equate your risk amount to something that is manageable, right? For example, you maybe every week you eat a buffet, right? And the buffet is like $50. You say, okay, fine, I'm not gonna eat that buffet, and then I'm just gonna take this $50 and equate that to my 1 trade. Okay, so every week I'm just gonna try once to sharpen my skills. Okay, so that's called equating your risk. Okay, so day trading, a lot of people didn't consider this to manage their risk. Okay, all right. Then in terms of trade management, 2 key questions that I always ask to the traders that I'm training. Number 1, what do you do if the trade is stop out? That's a simple one. You can either continue trading or you stop trading. All right, fine, that's easy to answer. But a lot of people didn't answer this question. What do you do if your trade is profitable? How would you manage that? Okay, do you have a partial take profit levels to make sure that you lock in your profit? Do you have a trailing stop? Do you have a final take profit levels? And do you continue to add position? These are all key questions. Because when a trade is being stopped out, that's probably a 40% chance or 30% chance, because you wouldn't want to have a system that is low in terms of accuracy. Okay, but when your trade is profitable, we are talking about the remaining 70% or 60%, or in fact can be 50%. Okay, then we are not answering the most important question. What if it's profitable? Then what do you do with that? Do you have a way to manage it? Okay, so day trading shouldn't focus too much on methodology, but it should focus on hard questions that people fail to answer. And I hope that with these sessions, hopefully that brings out certain questions for you. And on the 18th of Jan, I will give my solutions. Okay, all right. Okay, now what I like to do is I like to just share a little bit, right, on the alert thing. Okay, so some people don't want to code. Okay, that means you don't want to do anything. But in MT4, right, there is a place that you can set your alert, meaning that you can go in and then you can key in certain places, right, to alert you when price is there. This I find, all right, when I first started, I'm using this function, all right, and I find it very useful, because at least I know that if price touches this particular level, I would be looking at it. Okay, so it does requires a little bit of work, because it means that every weekend I have to spend some time to look at the pairs, look at the charts, and then set in the alerts. Now I no longer do that anymore. Okay, lazy, and I build all these automations for myself so that I don't even need to spend the weekend looking at charts. So it's just evolutions of traders. Okay, so this is the place that you can go to your MetaTrader 4 MT4. All right, what you do is you just right click on the chart, right click, okay, right click on the chart, and you can see this panel coming out. Let me just tap pen to draw that. You can see this particular panel here, right? Okay, under trading, so under this trading, right, under this alert here, you can just set in the alerts that you want. Okay, so for example, you want to the price to alert you, that means the platform to alert you, right, when it is at this level here. So what you do is that you right click, and then you will bring up this particular panel here. All right, and then you go under trading, you key in alerts, and it would just set in alerts. Okay, then where do you find the alerts? The alerts can be found at the trading at the terminal. Okay, so this is terminal here under the alerts tab. Okay, so you can choose the expiry of the alerts, and you can also choose the sound of the alerts. But one of the key things that must happen is that in order for the alerts to alert you, you must switch on your computer. That means the computer must be always switched on. Okay, because if your computer is not on, then the alerts will not happen. Okay, all right. So this is the first thing that I find it's actually very useful. Now, the second thing is, how do you receive notifications? So even for my own dashboard, all right, same thing, it's automatically sent. That means every time it's automatically sent, right? But you need to configure where to send it to, right? If you install your MetaTrader mobile app on your mobile, okay? Now, then once you key in your MetaTrader code, which means your Meta code ID, once you key that in, and the Meta code ID is unique to your mobile phone platform. That means that the platform that you install on your handphone, right, there is a unique Meta code ID. You have to go inside your MT4 or MT5 mobile platform, extract that Meta code ID and key in. So once you key in already, you enable push notifications, and then you can also notify your trade transaction. Then every time when the alerts here is being triggered, you will be sent to your mobile phone. Okay, you will pop out like a notification, dong, your alert is hit already, etc. So same thing, just now there was questions on how I receive the alerts, how I configure them. The configuration is done automatically, hard-coded into the dashboard. How I receive them, same thing, I take the Meta code ID, I key that in, and then every time when there's an alert, it would be sent to my handphone. Dong, 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 dong. Yeah, it will be sent to my handphone. All right. Of course, what I did was I built platforms, all right, to send automatically via Telegram to my community, to my students. So they don't even need to key in this already. Automatically it's being sent via Telegram. So there are ways to get around and there are ways to help you to manage in terms if you are day trading. Okay, all right, so that's one thing. Now the second thing that I want to share and I find extremely useful for day trading is these, which is the rectangle tools. Okay, so basically the rectangle tools, right, help to highlight regions or zone that you want to focus on. I know that it might be just a tool, all right, and you might be using lines, okay, but it makes a huge difference when you can see different colors and different highlights. When you have different colors, different highlights, right, it helps you to focus on where are the key areas that you want to trade in. I still do this even when I have all the lines and everything all automatically drawn for me. I still do that, which is to draw in these rectangle tools. Okay, so how to get the rectangle tools? It's not out by default on your MetaTrader platform. What you do is that you go to the place, right, that you draw all these lines, whether it's a trend line or horizontal line or Fibonacci, right click on it. So you right click, okay, and it should come out this platform here, and that says customize at the bottom. When you click customize, your rectangle tools will appear on the left hand side. You highlight that, okay, as the first step, and then click insert, and then it will just pop inside the right hand side. Okay, when you pop inside the right hand side, when you see the rectangle tools at the right hand side, right, you will find that when you close this, right, then the rectangle tools will appear on the drawing panel. Okay, so that's the very useful tools, even though they are simple. Okay, they are not method and they are not process. I mean, they are not method, but I see them as a process. So these process can be very useful if you want to just make slight changes and be profitable. Okay, all right. Okay, so this is what I say about horizontal tools. Okay, so for example, why I knew about that there could be a sell signal for pound yen. So this was pound yen, right? Because I drew this horizontal rectangle tools, right, to mark that this is a resistance level. Let me just show that to you. To mark this as a resistance level, that's to me like orange is like you know, danger, and there's a resistance. And I was able to take profit at bottom here because that's a green color, and that's a series of support level here. All right, so when price cannot move down, I was able to take profit, right, at 96 pips. So that's a very useful set of tools for me, and it's just very clean. Okay, so when I have the rectangle tools to tell me that this is the resistance, when I receive a sell alert, then I can focus on the sell alert. So when I receive a sell alert here, because that's another one more level here, okay, which I in my own chart mark with a horizontal tools, and I know that immediately this was a resistance, I could just, you know, take a shot here. Okay, so it's not a lot of effort. It doesn't take a long time, but it does becomes a very useful process. All right. Okay. So lastly, let me just show you the type of automations that can be done to help you manage your trade. Okay. A lot of people focus on automations, right? And it's almost a dream to them. Okay. But they end up very disappointed. Okay. Why do I say that? They hope that they can have a system and they put it there and then keep on running, and then keep on getting money. So if this is true, then you find only two things. Okay, number one, that there will be a lot of millions and billions out there because they keep on rolling, right? But if there's ever such a system out there, I'm pretty sure that they don't want to share with you. Okay, all right. So I find that over the years, you know, it's probably a lot more profitable and a lot more manageable, all right, to stop dreaming that there is a golden goose laying egg type of automations, but to let the automations manage your trade such that you only do one thing. Okay, you only decide whether you should open or close. Okay, so this is my automations that I built for myself and my students. All right, and it's a trade manager. Basically, it handles everything. All right, but what you need to do is to focus on answering the question: should I enter the trade or should I not enter the trade? And the rest, it will be handled by the automations. So let me just run this. Okay, here we go. Okay, it's going to move slightly faster, but basically it works on wash and rinse, right? So I already predefined how much I want to lose, which is $300, and the automations would use $300 to decide what is the lot size. So you handle the risk management, okay? So they will put in the stop loss, and they will put in, for example, the take profit levels. And as price continue to move in a direction, they will continue to shift the stop loss. So you see the small little red color thing, right? That's keep on moving up, and that's where the stop loss is, okay? And of course, when you have a winning trades, you want to keep on adding position. So when you press a calculator to calculate the extra lot size, how much profit you have, etc., by the time you finish using the calculator, the trade already moved. So the automation is useful to calculate that instantly and decide how much you should be adding. And especially when you are sleeping and doing like 24-hour instrument, right? You want to know when to exit should certain special event happen. So these will also help you to do the exit. Okay, so basically it's a whole range of trade management tools that start off with how much to trade. That means that what is the lot size? You basically decide how much you want to trade, okay? Either based on your 1 to 2% risk, or based on the fixed amount, or based on the fixed lot size, okay? You will just open the trade lot size according to what you define. Okay, then the next thing that you will do is that you will put in the stop loss and the target profit for you automatically based on the rules that's hard-coded inside. Then when the trade moves in a profitable manner, then you will shift the stop loss, which is very important because you find that sometimes, right, your loss get a lot, but your returns, right, get very little. Why is that so? Because you hold on to your losses, and when you are supposed to make money, you just cut yourself away. Okay, so what these trade management tools focus on is to log in more profit. Okay, as it moves, you keep on logging more profit, and then the next thing would be what? Okay, to keep on adding a winning position. Of course, if there's no winning position, you can't add. But if there's winning positions, and then when you keep on shifting the stop loss, right, they will keep on logging in more profit. When you have more profit, you can keep on adding the trade, right, and lastly to exit the position for you. Okay, so this is a whole array of trade management tools that I build myself for day trade. So I don't spend a lot of time, okay, to manage my trades. I just have to be alerted, okay, decide whether I want to take the trade, and then put in the automation, and that's I walk away. Okay, that will answer the question how you can day trade in 15 minutes as the whole process, and how I can have so many, I can trade so many instruments, and I can do so many things. Okay, all right. This is my, I mean, I come to the end of the presentation, but this is my contact. If you do need any clarifications, then you can contact me here, especially via the email or WhatsApp. My staff would answer you, but if there's a need to have further clarifications, they will direct the questions and then they will send it to me. But in any case that you do have other things that you want me to talk about, do write to me. Then I have the 18 Jan session. All right, I really submitted my slides for compliance. I can't add anything inside, but if there's burning questions, all right, then I probably just talk about it and you can just ask me during the session. Okay, all right. Any other questions that you like me to, any questions that you have that you like me to answer, you can just put it at the questions site and I'll answer that. Or anything that you would like me to clarify. So just to talk about on the 18th of Jan, I'll be talking more details into the nitty-gritty stuff. Like for example, if you have wash and rinse, what are the trade types that I want to focus on? And then what are the automations that you need to put in, exactly what kind of automations, and how do you decide that, prefer that? And also a bit of revision into wash and rinse, and to take a look into the more recent price action on wash and rinse. Okay, have you traded gold? Yes, gold is my best loved instrument. In fact, that if you have a look into this chart here, let me just share it with you. Okay, it's not included here, right? In fact, if you look at the 18th of Jan session, I will be covering a lot on gold. Okay, will you be able to get a copy of the automated dashboard? Well, my cost is included. The dashboard is included in my cost, and my cost is payable. You can go to my website, which is onlineforexmaster.com, and have a look. How do you tackle the sensitive news announcement? Okay, now this one, like for example, right, later on we're going to have CPI, huh? Okay, and you realize that before the CPI, a lot of US pairs, right, isn't really moving a lot. Okay, it seems to be pausing that. Let me just check my, yeah, correct. Okay, it isn't really moving a lot. What my experience and so far been doing very well is that for the whole wash and rinse strategy, we are sort of able to predict, right, what happens before the news. Okay, so for example, just give you one example. 2 weeks ago, or rather maybe 1.5 weeks ago, all right, when the dollar index was at 100.9 to 110, we already can see the wash and rinse happening in the dollar index on the buy side, bull side. Okay, so if you can go and check it out, or you can look at my past videos that I did with my students. We already talk about that dollar index is going to head up. Okay, now when the dollar index is going to go up, then what will happen? The index, the stock index will correct. So we were already trading into a counter trend short, right, in the stock index, and also a temporary short, right, in gold. So if you go and look at gold, the recent movement, right, there was a bearish wash and rinse, and we traded that. So sort of in a way, right, we don't really trade right inside the news. Okay, our trade comes prior to the news, about 1 or 1.5 weeks before the news, before the actual news, and we were able to trade that move. And when that news is out, like for today's CPI, right, we already have gotten out most of the trades because we have already locked in that profit. Okay, so we let it happen, the CPI happen, and then after that we trade in again. Okay, so this is how, in terms of the wash and rinse, how we tackle that. All right. How to overcome the difficulty or fear of increased contract size? Okay, equate your stop loss. I said already. Okay, what do you like to buy? What is the most expensive items that you must buy every month? You have to equate that. Or what's the most expensive things that you want to buy? Some people tell me that they want to buy handphone. Some people tell me that they like to buy what did they buy? They like to buy cars. Okay, some people like to buy computer, the computer game. You know what I like to buy? I like to buy shoes. Shoes. Okay, so and then you just have to equate that loss amount to something that you like to buy, and if you lose it, you just don't buy the item. So for example, I don't snack, I don't eat, like I don't drink coffee, I don't drink tea, I drink water only. And what do I do? I don't eat a lot, and food is a waste of me. And I don't like food, I don't like to eat. So I do save a lot of money from eating. All right. So these are things that you can start equating yourself with. Okay, because adding increased position size is really very scary. Okay, now the other way of doing so is that you add only when you're profitable. Okay, now let's say for example, right, if you look at just now the automations I show you, let me just show you again here, right? Now this one where it keep adding position when it keep going up, right? So instead of just keeping only one lot when you start, when you're getting profitable, right, you can add and it can become like 1.3. Okay, so this is also part of increasing your lot size. Okay, but you increase your lot size only when you're profitable. So these are two things that I'm doing, and I'm encouraging my students, right? What is the level of volume required for stocks to be considered liquid? What is the level of volume? I actually do not know how to answer this question. Yeah, so I skip for this one. What I'm looking for a coach and community that can guide me into a profitable trader. Okay, you can write to me. All right. Okay. Any other questions before I pass this back to Ethan? Okay, last two. What when you average up when it's trending up, does it not increase the average cost of your stock holding? Yes, it does. You do have to consume margin, but when I average up, it also means that I'm using my profit. Okay, I'm shifting the stop loss and then using my profit. That means I have already accumulated X amount of profit in order for me to accumulate up. That means I already increased my, amount of money as a margin. Okay. Okay, let me just pass this to Ethan.